Hi, everybody. Welcome to On the Money. I'm Maria Bartiromo. The market's hit 5-year highs. Is the rally for real? And is it too late to get in? Plus, a presidential report card, what Barack Obama has done right and wrong over the last 4 years. Plus, food for thought. The CEO who says Obamacare is a form of fascism. Will the crunchy consumers of Whole Foods be left with a sour taste? And know when to hold them and when to fold them. The importance of keeping a poker face for women in the business world and learning how to do it firsthand. On the Money begins right now.
This is America's #1 financial news program, On the Money. Now, Maria Bartiromo.
Here's a look at what's making news as we head into a new week on the money. The stealth market rally keeps powering forward, and the major indices are at or near 5-year highs. By Thursday, the S&P 500 hit a fresh 5-year peak and was riding a 3-day winning streak. The markets have been powered by so much money on the sidelines, new money coming into the market at the beginning of the year, as well as encouraging economic news, and just a lack of bad news when it comes to earnings. Stocks kept on climbing on Friday. Lots of earnings news for big financial companies this week. Goldman Sachs blew past expectations. Bank of America finished ahead of predictions, as did Morgan Stanley, while Citi fell well short. J.P. Morgan Chase beat expectations, but cut Chairman and CEO Jamie Dimon's compensation in half to $11 million because of the so-called London whale trade, which cost the bank $6 billion. Retail sales were up more than expected in December, up 0.5%. Americans ignored worries about higher taxes and kept headed to the stores. Consumption makes up 70% of the U.S. economic growth. The debt ceiling debate, a presidential report card, and a quiet market rally. What does it mean for your money? Joining us right now, Jared Bernstein, senior fellow at the Center on Budget and Policy Priorities and former chief economist to Vice President Biden. Also with us is Russ Kostrich. He's chief investment strategist with BlackRock. Gentlemen, good to see you. Thanks so much for joining us.
Thanks for inviting us, Maria.
Thanks, Maria.
Russ, let me kick it off with you. A pretty good rally. On Thursday, the S&P 500 hitting yet another 5-year high. Is this rally for real? Do you think it's sustainable going forward as we continue through this earnings period?
I think in the short term it is. I think we're probably going to hit a road bump in February. And the reason I say that is we've got a lot of flows coming into the market early in the year. People were nervous in December. They're coming back into stocks. That's a good thing over the longer term. But we do have some issues coming up. The debt ceiling, obviously, one of them. The second question is, as we start to get January's economic data, how big of a hit do we have from the tax increases, the expiration of the payroll tax holiday, and what do those numbers, which may be a bit on the soft side, do to stocks? Absolutely.
That is the question of the day, isn't it, Jared? The debt ceiling debate, the U.S. set to hit that $16 trillion limit on borrowing in the next month, if we haven't hit it yet. Let's take a listen to what President Obama had to say about the potential battle looming in Congress.
Markets could go haywire. Interest rates would spike for anybody who borrows money. Every homeowner with a mortgage, every student with a college loan, every small business owner who wants to grow and hire.
Jared, how does this play out?
Well, we're beginning to hear lots of sounds from Republicans that are more in a compromising mode than we heard, say, a week ago. Right now, they're talking about perhaps an increase in the debt ceiling that lasts for a couple of months, that is offering that to the president. Frankly, and Russ may agree with me here, I don't think markets would react very approvingly to basically just another lurch from crisis to crisis. It wasn't too long ago that, Maria, you and I were sitting in these chairs talking about the fiscal cliff, now the debt ceiling. Do you want to have this discussion 2 months from now?
Well, I think everybody believes that this debt ceiling will be extended. But, Jared, you know what? I mean, you know these guys well. I mean, you worked right there with Vice President Biden. Let me get your take on this. I mean, if we keep fighting about spending cuts and reining in the spending, how come it's always about putting the gloves on and fighting? We're not going to do this. We're not going to. How come we haven't seen any real proposals for spending cuts? Are we going to see that, you think?
I do think so. I mean, I think that we have to go through this. Unfortunately, we've, at least recent history suggests we have to go through this, crisis mentality to get there. I will say this, and we shouldn't forget it. Thus far, there's been $1.5 trillion in spending cuts that have been made. They're on the books. There's been $600 billion in tax increases made on the books. So that's over $2 trillion in deficit reduction over 10 years. Doesn't get us all the way there, but it does get us largely about 2/3 of the way there to debt stabilization stabilization, at least within a 10-year budget window.
Russ, what do you think? I mean, of course, we are approaching this with caution. We know that there's going to be more back and forth. But in the middle of it all, we've got earnings season. And, already some people are saying that this anticipation of all of these cliff after cliff, has already impacted the earnings period. What are you looking at? What are you seeing from the fourth quarter reporting season so far? It's been a big week, obviously, this week for financials.
We're seeing decent performance. And again, I think, compliments to corporate America, because they've been able to grind out strong earnings growth with a relatively weak recovery. And margins have remained much higher than people thought, and this has helped. We're seeing a recovery in the rest of the world, and that has also helped. So I think it's going to be a decent year. I don't think the problem is the trajectory of the economy. I think the question is, how much will these issues from Washington, whether it's the debt ceiling, the sequester, the lingering uncertainty over the long-term budget picture, undermine confidence, lower the valuations of U.S. companies, because people just have less confidence in the long-term trajectory.
And Jared, President Obama starts his second term next week. His inauguration, of course, Monday. What has he done right in the last 4 years, in your view? What could he have done better, or has he done wrong?
4 years ago, right around this time when I was a member of the administration's economics team, and I was remembering just the juxtaposition of just great hope and expectations, and just the real horror of what was going on in the macro economy. GDP contracting at 9%, losing 700,000, 800,000 jobs per month. I think the president came in and hit very hard and broke the back of the Great Recession a lot sooner than people expected. Certainly the financial markets were reflated much more quickly and at less expense than people expected. And pretty soon, really by the second half of 2009, GDP was growing, and it's been growing since. I think on the other side, you asked some things that haven't gone as well. I think the president is great at explaining his vision. I think he has yet to really kind of explain with a kind of granularity about what he's up to day to day, particularly around the economy, in ways that you may recall Bill Clinton did so effectively at the convention. I also think that politically, the president doesn't quite like to mix it up in these deals the way, say, his vice president, I think, very effectively does. And I think that that's something that would be good to work on in the second term.
Yeah, it's a great analysis. Russ, what about investors at this point? What should we be doing with our money in the face of all of this? I know you like emerging markets and smaller countries. Why is that, and how do you get a piece of that growth?
Yeah, and again, I think the outlook for the U.S., I think we're going to have a decent year. It may not be great because of some of the fiscal drag, but I'm confident, absent more problems from Washington, the U.S. economy will expand. The question is just, what do you pay for that? And Maria, as you know, we've been advocating more of a position internationally. And the argument there is not that there aren't problems in emerging markets or Europe, but that those problems are better reflected in the price. The S&P 500 trades at a price to book of about 2.2. It's roughly half that level in Europe.
Gentlemen, thank you.
Thank you.
We'll see you soon.
Thank
we
you.
appreciate your time tonight, Russ Kostrich and Jared Bernstein. Up next, we're on the money and on the shopping list, from the price of milk to the price of health care for his employees. Whole Foods co-founder and CEO John Mackey joins me to talk grocery. And then later, how's your poker face? Some women in business are unleashing their inner card sharks, and it's paying off. That's no bluff. As we take a break, take a look at how the stock market ended the week.
I think that would be a grave mistake. I don't think that would solve anything. I know they're going to try it, and how far you go with that game of chicken, I have no idea.
One thing that the public should understand is we're not afraid of anyone. We're not afraid of bringing any kind of case against anyone, no matter how big they are, how wealthy they are, or how prominent they are. Sometimes it takes a while to build those cases.
Too often the debate becomes very simplistic. Don't drink soda and the obesity epidemic somehow will magically go away. We don't believe that's true. We don't believe that we've caused the obesity epidemic. We know we haven't, but we want to be part of the solution.
Part of the conversation in the world today, in business and politics this week, a healthy lifestyle is part of the mission. And business outlook of my next guest. Jan.20 is the co-CEO and co-founder of Whole Foods, as well as the author of Conscious Capitalism, Liberating the Heroic Spirit of Business. John, good to have you on the program.
Thanks for having me on.
Thank you so much for joining us. So kick it off here with that comment about business. Why do you think business is heroic?
Business is the greatest value creator in the world. It creates value for its customers, for its employees, for its suppliers, for its investors, for the communities that it's part of. It doesn't get credit for that. The narrative about business has been hijacked by the critics and its enemies. It's portrayed as selfish, greedy, and exploitative, when in fact, it's helping to lift humanity up to eliminate poverty and lifting humanity up to higher levels of prosperity. It's good. It's heroic.
I am so glad you said that. I completely agree. And it doesn't get the credit. You're absolutely right. So I want to talk about the value you've created with Whole Foods for sure. But let me stay on the book for a moment, because in the book, you discuss keeping all the stakeholders well. Investors, employees, consumers. How do you balance healthy business with that mission? I mean, isn't it impossible to please everybody all the time? How do you do it?
It's not always easy, but I don't think it's really about balancing it. That kind of implies that these trade-offs. The conscious business creates strategies where all of the stakeholders are winning simultaneously. When you talk about trade-offs, it's really a failure of imagination and creativity. The conscious business figures out ways to avoid those kind of trade-offs.
You've made some public comments about healthcare reform. I want to talk about this because I speak to a lot of CEOs all the time, and the Affordable Care Act is something that they continue to say is way too expensive, impacting their business. Earlier this week, you likened the Affordable Care Act to fascism. Comments I know that you've since sort of walked back or pedaled away from, saying it was a poor choice of words. What did you mean? Talk to us about what you were trying to articulate.
It's a poor choice of words because it has so much emotional baggage for people due to the stuff in World War II. But what I was trying to articulate is that we're moving away from free enterprise capitalism, which allows innovation, experimentation, creativity, and allows the marketplace to create progress in healthcare, to more and more government controls, which will bog it down in bureaucracy, will raise cost, and will not produce the progress that we need in healthcare.
What impact does this reform have on your business?
It's raising cost. It's the opposite of being affordable healthcare, because it's making it more expensive for businesses like Whole Foods. And as a result, that's less money that we have to pay our team members for wages or other benefits. The health insurance just grows as a percentage of what the total compensation that we're paying people is.
I know you've been very thoughtful about this subject. You've been CEO since 1980. The company has done very well. You're offering coverage to employees working more than 30 hours a week. You've seen tremendous growth. Your stock up more than 1,000% since the worst of the financial crisis. Tell me about the consumers' attitudes about foods. Has it changed over this time? The cost, the sources of their food. What kind of sentiment changes have you seen from your customers?
You have lots of different trends in this society. So there's definitely a trend towards healthier eating. I mean, Americans are now 69% overweight, 36% obese. We spend 80% of our healthcare dollars in lifestyle diseases such as heart disease, cancer, diabetes. So there is a trend towards healthier eating.
All preventable, by the way.
That's right. And there's also a trend, of course, to more junk food. So we have different trends in the society. Of course, my business focuses on the healthier trends, and that's what we're trying to do, is help America to eat healthier and live longer.
You know so much about this. How do you eat? Are you a vegan?
I am a vegan, yes. 10 years now. No oil vegan. Try to avoid eating processed foods like sugar and white flour. That's worked very well for me. I very seldom get sick, feel great, have high vitality. I feel better today at 59 than I felt really when I was 39.
Isn't that wonderful?
It is.
Some people question whether or not organic is worth it. Is organic worth the extra money?
I think that it is. It's definitely, I think, better for the environment. It lowers the risk of pesticides in the groundwater, pesticides in our own bodies. So I think that's a good thing.
John, it's great to have you on the program.
It's great to be here, Maria.
Thank you so much. Jan.20 joining us. Up next, we're on the money, why women and gambling may make a better combination for business than you realize. The hidden power of poker to boost the bottom line. And look for us on Facebook /Maria Bartiromo. Back in a moment. Hi,
am a poker player, and there is really nothing greater than walking into a poker room in Las Vegas full of men. Reminds me of my first job at Merrill Lynch.
I think women do a few things better than men. I think they have better intuition, and they do a better job of keeping a poker face. Women can have fun with money in something that's traditionally a man's world. It started with inviting just our clients and prospective clients. It's turned into kind of a fun networking group.
Oh, baby!
You'll see who the very assertive ones are and who the very passive ones are. You'll learn a lot about other people when you're playing this game.
There's CEOs here. There are women who sold companies for $100 million. There are women going through very public divorces that need to learn negotiating skills.
If you want to be good at the conference table, you need to be good at the poker table.
50% of this for me is watching and shaking people down. Half of this game is reading the table.
So does knowing when to hold 'em and when to fold 'em make for better businesswomen? Lebenthal & Company CEO Alexandra Lebenthal also started a series of ladies' poker nights in New York. Alex, great to see you again.
Great to be here.
Thanks so much for joining us. So why poker? What's the payoff for a ladies' poker night?
You know, it's all about the poker face, and I say that with no joke, although I actually have a terrible poker face for those who know me, but it's really about the negotiation. About holding your cards to your chest and learning how to not give away what you're thinking or what you're doing.
Wow, I think that's really interesting. That's a great analogy. So do you think women as a group tend to give it away and sort of, put themselves at a disadvantage as a result of that?
I think women absolutely do that. They've done that in business, and they do that particularly when it comes to investing their own money, which is always such a tragic thing to see, because oftentimes a woman will say, I know I'm really stupid, I know I have a really small account, you shouldn't take time to bother with me, instead of presenting themselves as somebody who actually has money to invest that should be taken seriously. So the poker game really allows everybody to kind of explore that side of them a little bit.
I love that. Now, I have to say, I guess it was this week, there was a study, or recently, that was released that female hedge fund managers produced a better return, a return of almost 10% in the first 3 quarters of 2012, but they actually had a better overall performance than male hedge fund managers.
I saw that too, and it made me smile, and I think that study has come out before, and it has shown the same thing. Now, just as women may put themselves out too much, I think when it comes to women being professional investors, that may actually be an advantage for them. They may think more clearly, more carefully, more thoughtfully, and more emotionally, perhaps, about the investments that they're making.
Do you think the financial services industry is serving women well? Do they speak to women? Do they market to women in terms of their own risk profiles or how to invest?
The financial services industry has been trying to speak to women for 20 years. And it started with some really beautiful pink and purple brochures some time ago, and they haven't quite gotten it yet. It's not just about the stuff that you're investing in, it's about all of the emotion and all of the thought behind it. That's what women connect with, not what the return is, what the yield is, what the price is.
Let me ask you about investing today. How would you invest in this environment? Lots of challenges in terms of Washington and a slow economy. The muni bond market, obviously, you and your father have long specialized in at Lebenthal. What's your take on how to allocate capital today?
You know, there are obviously so many things going on, and the municipal bond industry is still somewhat a question in terms of what will happen as the budget talks continue, and will there be some form of tax on municipals. I think the important thing for people to do, and this is both men and women, is not to make any rash moves when things happen in Washington or when there are major moves. Really try and remember that you're planning for your life. You want to think about what your goals are and how your investments actually fit into that. And one of the most important things that people should be doing actually every year is sitting down and doing a lifestyle analysis and figuring out, how much am I spending? How much do I have to save and how much do I have to invest? Have my goals changed? And then I do recommend people work with a financial advisor, a financial planner, and really take the steps to map out what investments will fit into that to serve your needs.
Alexandra, great to have you on the program.
Great to be here.
Thanks so much, Alex. Alexandra Lebenthal joining us. Up next, a look at the news this week that will have an impact on the money. And where are the top jobs? Finding the best companies to put in a day's work? We are searching for the answers. Stay with us. For more on our show and our guests, check out the website, otm.cnbc.com. And I hope you'll follow me on Twitter and on Google+. Look for @Maria Bartiromo. First, though, here's a look at the stories coming up in the week ahead that may move the markets and impact your money this week. Monday is the second inaugural for President Barack Obama. It's also a market holiday in observance of Martin Luther King Day. Then we are in the heavy part of earnings season for the fourth quarter. Reports are expected from Johnson & Johnson, McDonald's, Verizon, Procter & Gamble. Also coming out in tech, Apple, IBM, Google, and Microsoft. Tuesday, last month's sales of existing homes will be out. And on Friday, we get new home sales reports for the month of December. Also, by the way, Friday is Treasury Secretary Timothy Geithner's last day on the job. Jack Lew takes over from there. Finally, Fortune magazine releasing its annual list of the 100 best companies to work for. Search giant Google was tops for the fourth year in a row thanks to the 100,000 hours of free massage, employee wellness centers, and a 7-acre sports complex. Pretty good. Rounding out the top 5 are SAS, a data analytics firm, CHG Healthcare in Salt Lake City, the Boston Consulting Group, and Wegmans Food Market based in Rochester, New York. 78 of those best companies are looking to fill more than 65,000 jobs this year. That'll do it for us for today. Thank you so much for joining me. Next week, I'll be reporting from the World Economic Forum in Davos, Switzerland, where business and political leaders will be gathering to talk global issues. We will take you there. Each week, keep it right here where we are on the money. Have a great week, everybody. I'll see you again next weekend.